Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, May 20th, 2022. The Tax Foundation is advocating for sales taxes. The Surprising Regressivity of Grocery Tax Exemptions is the title of a study written by Jared Walsack for the Tax Foundation. Now, here are some of his findings. Exempting groceries from the state sales tax base reduces economic efficiency without achieving its objective of enhancing tax progressivity. A household in the fifth income group spends almost 70% more on groceries than a household in the lowest income group. And a household in the top decile spends over 3 times as much as a household in the lowest. If lower income families spend moderately more on groceries as a share of their income, but substantially more on other household goods, then they'll be worse off under a tax system which exempts groceries but imposes a higher rate on the other goods than would be necessary if groceries were included in the base. Grocery purchases are a sizable and stable share of personal consumption, and exempting them from the primary consumption tax not only erodes the sales tax base, necessitating higher rates on other goods, but it also increases revenue volatility. The poorest group of households pay 9% more sales tax liability with a grocery tax exemption than they would if groceries were taxed and the general rate was reduced commensurately. Grocery tax credits provide actual progressivity at a lower cost than the broad exemption of groceries. Under a revenue-neutral expansion paired with a $75 per person credit, the poorest decile of households would save 31% on sales tax liability. Income taxes reduce the return on both labor and investment. That means they're actually a tax on both present and future consumption. Conversely, sales taxes only affect present consumption. Therefore, a sales tax does not have the same impact as an income tax on economic decision-making that affects labor supply, capital investment, or productivity gains. All else being equal, heavier reliance on sales taxes rather than income taxes is better for a state's competitiveness and economic growth. And finally, sales taxes are more stable and pro-growth than many other forms of taxation, especially income taxes. So, policymakers have an opportunity to increase tax progressivity, enhance revenue stability, and improve economic competitiveness by taxing groceries, providing a credit, and using the remaining revenue from base broadening to cut income taxes. Now, that last finding is particularly significant because what's being stated there as true is evidence of the growing, though sometimes reluctant, recognition by the Tax Foundation that, quoting here again, sales taxes are more stable and pro-growth than many other forms of taxation, especially income taxes. Now, this conclusion further confirms the economic analysis done by groups in Alabama, Georgia, and Nebraska, where there are bills pending in their state legislatures to replace those states' income taxes with a consumption tax modeled on the FAIRtax. But the big elephant in the room is the federal income payroll tax, which raises the price of everything we buy by at least 10%, and in some cases maybe as high as 20%. In addition, because of payroll tax and income tax withholding, there's already between an 8 and 25% tax on all purchases because you can only purchase goods and services with your net pay after taxes. Now, reforming a state's tax system does not remedy the federal situation, but of course it will help. The state fair tax proposals in Alabama, Georgia, and Nebraska contain a prebate, as does the national bill, and makes the sales tax much less regressive. Now, that's a common complaint raised against sales taxes. In addition, and this was the point of the above study, the state fair tax will lower the overall rate and help all citizens, particularly the lower income citizens who, in addition to receiving the prebate, will pay less for the things that they purchase the most. In conclusion, like many foundations in D.C. that owe their continued livelihood to the income payroll tax system, the Tax Foundation has not endorsed the FAIRtax. However, the Tax Foundation seems to be slowly recognizing the economic truth that sales taxes are better than income taxes. Now, there's no economic or policy reason for the Tax Foundation not to endorse the FAIRtax. That means our members should be writing to the Tax Foundation, reference this study, and ask, hey, if it works for the states, why wouldn't a national retail sales tax work for the entire nation? The ruling class and their minions in D.C. are feverishly working to justify continuing the corrupt and failing income payroll tax system. They may have control of the media, but they don't have control of the basic intelligence and common sense of the American people. The rapidly growing level of income tax evasion and the growing condemnation of the income payroll tax system signal that the ruling class's efforts to convince us that black is white are coming to an end. As Walt Disney once said, all our dreams can come true if we have the courage to pursue them. The income payroll tax system is broken. It's no longer working. We can't repair it, but we can replace it with a fair tax. Now, all Americans must join us before it's too late and the wonderful country we love is further harmed. Join us and take back control of our country, not with bullets, but with the elimination of one of the biggest threats to our liberty and economic prosperity, the income payroll tax. We should all remember Edmund Burke's warning that applies to our efforts to take back control. Nobody made a greater mistake than he who did nothing because he could only do a little. And we should also remember this quote from George Orwell's 1984, which, if we do nothing, may very well foretell your and your children's future. If you want a picture of the future, imagine a boot stamping on a human face forever. So what can each of us do? We can write letters and make calls to our elected representatives and attend Zoom town hall meetings demanding that if they really want to allow Americans to take back control, the first step is to eliminate the income payroll tax system and enact the fair tax. Take back control. Help us pass the fair tax. The IRS will be gone and we'll pay our taxes when we make purchases. We, not the ruling class and their minions in D.C., will decide how much federal tax we pay, and we'll know how much tax we're paying because they'll no longer be hidden from us. Taxes will be clearly shown on every retail receipt. If you have friends who don't know about the fair tax, send them to FAIRtax.org. Have them watch the whiteboards under how it works, and if they agree, ask them to please join us. Then, contact your members of Congress and the President and demand that Congress pass the fair tax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.